So, what if I told you that the real secret to building incredible wealth isn't about having some complex high tech algorithm? What if it's all about simplicity? Today, we're going to unpack the powerful and honestly kind of counterintuitive investment philosophy that made Warren Buffett a complete legend. You've probably felt this way before, right? You look at the world of finance, all the charts, the jargon, the crazy speed, and it feels like a game that's just not meant for you, a race for geniuses with supercomputers. But what if that whole idea is just wrong? Now, our guide on this journey is Danial Jiwani's fantastic book, which really breaks down the strategy of the world's most successful investor. We're going to dig into the insights from his work to see exactly how Buffett did it. So here's our game plan. First, we're going to shatter a big illusion about investing. Then we'll learn to think like a business owner, not a stock trader. We'll talk about why patience is basically a superpower, uncover your real secret weapon, and wrap it all up with one very important question. Okay, first up, let's talk about the image of investing that most of us have in our heads. Because honestly, it's that image that stops a lot of us before we even get started. When you hear the word investing, you probably picture it, right? A wall of screens with blinking numbers, people yelling into phones. It's a world that seems to be all about speed, complexity, and getting information a microsecond before anyone else. And what does that picture do to us? Well, it makes us, the individual investors, feel totally out of our league. We think we're too small, too slow, and that winning is basically just a game of chance. But Buffett's strategy starts by taking that entire idea and just flipping it on its head. So, how do we fight that illusion? It all starts with one huge shift in your mindset. We have to stop trying to play their frantic game and start playing our own, much smarter one. So the myth tells us that winning is all about predicting where a stock price is going tomorrow or next week. It's about trading, buying, selling, constant action. But according to Buffett, that's not really investing at all. Buffett has this brilliant way of explaining it. He says in the short run, the market is a voting machine. It's a popularity contest driven by emotions, fear, and whatever the latest news headline is. But in the long run, he says, it's a weighing machine where the true, heavy, fundamental value of a great business always wins out. And this quote just hits the nail on the head. You're not buying a ticker symbol that blinks on a screen. You're buying a piece of an actual business. And if you wouldn't be excited to own the whole company for a decade, why on earth would you just rent a tiny piece of it for 10 minutes? Okay, so this idea of long-term ownership brings up a really powerful, kind of weird idea. If you're not constantly trading, what are you doing? Well, you're using your greatest strength. You are winning by waiting. Again, we've got to fight that image from the movies, the hyperactive trader who's making a fortune with every click. The reality for most people is, well, it's the exact opposite. Most pros will tell you that super frequent trading is a loser's game. And why is that? Well, every time you trade, you pay fees. And more importantly, you increase your chances of making a dumb, emotional mistake. The real winner's game is about one thing: being extremely patient and letting the magic of compound interest do all the heavy lifting for you. So, this is so important to get. Buffett's unbelievable returns didn't come from a bunch of genius moves. They came from this incredibly simple three-part formula. First, the power of compound interest. Second, a very long time for it to work. And third, having the discipline to just not mess it up. And that third piece, discipline, that's really the core of this whole thing. If success isn't about being the smartest person in the room with the fastest computer, then what is your real advantage? The answer, it turns out, is all in your head. A huge concept here is the margin of safety. Think of it like this. Way back in the 60s, American Express got into huge trouble because of a scandal. The market panicked, everyone sold, and the stock price just cratered. But Buffett looked past the panic and saw that the core business, the traveler's checks, the credit cards, was still fantastic. So he bought in big time at a ridiculously cheap price. That huge discount, that was his margin of safety. It was a built-in buffer that protected him even if he was a little bit wrong. And like Buffett says himself, real risk isn't about the market going up or down. Real risk comes from you not knowing what you're doing. It comes from investing in stuff you don't actually understand. That just flips the whole idea of risk completely around, doesn't it? So what does this discipline actually look like? Well, it's a list of things you do, and maybe more importantly, a list of things you don't do.
You buy when everyone else is panicking. You stay away from businesses you can't explain to a 5-year-old. You invest in simple, boring, stable companies. You ignore the daily noise from the news. And most of all, you learn to control your own emotions.
And there it is. That's the big secret. Your true competitive advantage isn't a sky-high IQ or some insider tip. It's your temperament. It's your ability to stay calm and rational when everyone else is freaking out. That is an edge that no amount of money or computing power can ever buy. So when you put all these pieces together, you start to see that this isn't just a technique for picking stocks. It's a whole philosophy for how to build wealth over a lifetime. Look, what this all boils down to is almost shockingly simple, which is probably why it's so hard for most of us to actually do it. You don't need fancy software, you don't need secret information. You need the right mindset, a ton of patience, and the discipline to stick with your plan. That's it. Seriously. And this might be the most crucial point of all. This isn't a strategy you can just try out for a year or two. Buffett's incredible success is a direct result of him applying these same simple principles consistently through good markets and bad for his entire life. So we're going to end with the same tough question the book asks you. Forget about what the market's going to do next year. The real question is this: are you patient enough to become wealthy in 20 or 30 years? The answer to that one question might be the single most important key to your entire financial future.